Good morning. This is Paul Georgie from Allendale. It's October 14th, 2010. The excitement this morning is coming from outside trade that's influencing the grains, and that is the dollar. The dollar is down sharply as we speak. We're down 55 to 60 points, making new contract lows, new lows of the move here since January in the actual index. So the dollar continues to weaken. Crude oil is higher, up 44. Gold is up $7 to $8. The grain markets all higher overnight on the rebound from yesterday's profit taking. Corn anywhere from 3 to 5 higher, 7 to 8 higher in soybeans, 4 to 5 higher in the wheat. Some news out this morning. First of all, we had another 280,000 tons of soybeans sold to China this morning, which that's getting to be old hat, as they need to buy a significant amount each week, and that's what they do. The export sales reports will be out tomorrow morning, delayed a day here because of the holiday on Monday. Other news, the crush number is out this morning. NOPA crush, they put crush for September at around 125 million bushel, which is higher than what the trade was expecting. They were looking for about 116. This is about 16% higher than last year. So we're starting off the marketing year and the consumption year here with soybeans usage up considerably. Trade was expecting, and the USDA reports are expecting about a 5% decline. So starting well above that for the month of September. Other news, there's been some rain in South America, Argentina, more rain for Brazil here in the next few days over the weekend, all helping their growing season and help at the start of their growing season anyway. And it should be actually a negative influence to prices if we're looking at fundamentals. But all of that aside, the market's looking at inflation. PPI number was out this morning, showed inflation greater than what was expected. The trade was expecting a 0.2%, came in at 0.4% increase, and the gives us an excuse or a reason why we've seen strength here in the grain markets, actually in all the commodity markets over the last several months. Yesterday, funds were big sellers in corn. They sold about 15,000 contracts. Big question is going to be, are they going to be back in buying today? If they do, I think that's what we're going to need to push this market up to that $6 level that many traders are expecting us to hit very soon. We're going to need the funds involvement in order to get to that level. So that'd be something that you need to monitor very closely here today. In the soybeans, the market went up overnight to the 1194 area in the November contract. Since has set back about 10 cents off those highs. That $12 area in the November soybeans is a hurdle to push through. If we take that out today or even tomorrow, it will signal another step higher, more than likely, as we go into next week. In the wheat market, Ukraine is reporting its planting progress well ahead of last year. They're at 85% complete for the year, and ahead of normal as far as planting of their winter crops. And China also raises its wheat crop production from 114.4 up to 115.1. So look for more buying to step into this market again today as the market looks to the weakness in the dollar and inflationary concerns, as gold prices are also higher here again this morning by $7 to $8. In the livestock trade, cutout values there were slightly higher. Choice up 16, select up 33. Technically, we've got good support around the 97.80 area. 99.60 is our resistance area in the December contract. Still waiting for some trade to develop. Bids are down around the $94 area in the south. Asking prices are at 97. Last week we traded at that 95, 95.5 area. In the hogs, cutout values continue to slide there, down $1.83. We're starting to hear more and more reports that we're seeing heavier weight hogs come to market. That could be for several reasons. Either the excellent weather conditions that we've had recently has allowed the hogs to gain a little faster, but it also is a possibility we're starting to see signs of liquidation. Heavier hogs are coming in because some of the gilts that are held back for breeding are now already being sold as producers look ahead with the high corn prices and don't want to fight that economic problems they've had a couple years ago. Also, we're hearing sow prices are sliding as sow numbers continue to increase at markets. That is giving us a sign that we are starting to liquidate the hog herds, and I think that's an important sign when you look at a potential topping action in corn, is that yes, these high prices are starting to ration demand, and we'll have to monitor that very closely. The hog futures took out support yesterday. They've got support today at 70.55 in the December contract. A weaker close today again would not be a very positive situation for the hogs and could cause some acceleration, some liquidation here on the downside. So stay tuned with Allendale. We'll try to keep you informed the best we can. Give us a call if you got any specific questions. You can reach us at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.